Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Chris Dearborn, managing director on Nasdaq's market intelligence desk, for an update on technical levels to watch in the Nasdaq 100 in what looks to be an incredibly busy week of the month, if not for the year, with so much inflation data. We have the FOMC rate decision. Of course, we have quad witching on Friday. Chris, there could be some fireworks this week to help determine the direction of this market.
Yeah, it's kind of interesting that you say that because every month we cycle through this type of information, but it's never more important than coming into year end. I mean, look at what happened last week. The index fell last week. It was down almost 3.6%, breaking 2 weeks of gains. I mean, it's kind of tough. You come in this morning and the markets are up, the index is up, but then the VIX is up over 7% as well. It's giving you kind of conflicting messages about where we're going to go this week. You know, everything comes down to CPI tomorrow. The data that we saw last week on PPI and then on consumer sentiment was both stronger than expected, which generally would be good for an economy, but bad for traders, especially with trying to predict where the FOMC is going to go with the next rate hike. I mean, right now, it's looking at a 50 basis point, 75% of that is baked in, and that's what the CME tool is looking at versus a 75% basis hike, which is only 25%. You look 2 months ago, it was guaranteed to be a 75% basis hike. So again, will the CPI number tomorrow throw that into disarray for Wednesday's announcement? It's going to be tough to say. Again, it's going to come down to his comments on what the actual terminal rate is going to be and how long it's going to stay there. Everyone's kind of in agreement for the most part that we're going to get to that 5.25%. The question is how fast and how long it's going to have to stay. If CPI starts to show a little bit of weakening here, that could be good. We're seeing that a little bit in unemployment, especially if you look at the week over week numbers as opposed to the non-farm payroll number. If you look at week over week, this is the most for long-term unemployment as opposed to new unemployment. So you're looking at 1.7 million almost, which is the highest number it's been in almost a year. So again, we're starting to see some of that flow through, but it's just not enough to get this market a boost. Again, you know, when you look at 7.3% CPI year over year is what we're looking for, it's going to be tough. If it comes in anything stronger, it's going to be a tough 2 days.
Yeah, well, I mean, it's also, think about it too, Chris, even if it does come in a bit, right? Even if we got some sort of surprise where it's a full percentage point, right? It would indicate to me that their policies are working. So why would they shift course so quickly? We saw that mistake a few decades ago and what happened there. So why would they go and shift course if what they're doing is working? Because a 1 month reading is not a trend make that you and I have spoken about a number of times. So I don't think they're going to change course, but we'll see. Stranger things have happened in this market. Let's take a look at your first chart here. Give us some fresh technical levels to watch in the Nasdaq 100.
Right. The index is still range bound. We've been talking about it for weeks, right? Since November 10th, it's really been range bound between the 50-day simple moving average and the 23.6% Fibonacci retracement. Those ranges are starting to narrow a little bit because we've been trading in that range for longer. So as time goes, those bands kind of lessen a little bit. The 50 days at 11,395, the 23.6 fib is 11,895. You're talking about a 500-point range, which could go either way in, very quickly, depending on what happens in traders' view. Very near term. Support is tight at 11,592, then 11,430. Resistance is right where we are right now. The index is trading at 11,610. We're up 0.4%. Resistance is 11,615 and 11,650. But again, we're still range bound, bearing the broader macro environment.
All right. And what constituents are leading the way?
Yep. Breadth is strong, 70 to 30. Microsoft is up big on the news with the London Stock Exchange, and you got Apple and Comcast acting very well today, adding to it. Tesla's down again, it's gained back a little bit, but that's detracting about 22 points, followed by Meta, Moderna, and Netflix. And don't forget, this Friday is the Nasdaq 100 reconstitution. We got 6 new members going in and 7 coming out. So again, that's going to be jiggled for next week with some stronger participation, all based on market cap of the non-financials.
All right. Appreciate that, Chris. Thank you so much for calling our attention to that. We'll talk to you later this week. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.